Hello, friends. Your next Social Security check may not look the way you are expecting it to look. I am not saying that to alarm you. I am saying it because the Social Security Administration just dropped an update that is already moving through the system right now, quietly, without personal notification, without a phone call to your house, without a letter arriving in your mailbox before the change hits your account. And if you are a retiree collecting Social Security benefits, there is a real possibility that what lands in your bank account on your next deposit date is a different number than what landed last month. Some of you are going to see more, some of you are going to see less, and a smaller group, but a very important one, has a specific action available to them right now that will directly determine which of those two outcomes they experience. The window on that action is not wide. This is not something to bookmark for the weekend. I went through everything SSA has officially released around this update, the policy language, the processing timeline, the categories of beneficiaries it touches, and I am going to break it down today in plain English. What changed, who it affects, what the real dollar impact looks like, and exactly what to do if your situation puts you in one of the affected groups. Stay until the end because the final point I am going to make is the one that applies to the most people watching this right now, and it is the one SSA is communicating the least clearly. If SSA Now has helped you understand your benefits in a way that nobody else has taken the time to explain, subscribe right now and turn on notifications. The people subscribed here get this information before the change hits their account. Everyone else gets it after. In the world of Social Security, after is almost always the more expensive place to find out. Here is the core of what SSA just released. The Social Security Administration has confirmed
processing update affecting benefit calculations across multiple retiree categories simultaneously. This is not a single isolated adjustment. It is the convergence of several policy mechanisms that all activate around the same period. Updated earnings processing from the prior tax year, revised Medicare premium deduction amounts, income threshold resets, and the continuation of an overpayment recovery initiative that has been running since last year and is now reaching a new wave of affected accounts. What that means for you depends entirely on which category your situation falls into, so let us go through them one by one. The first thing that may change your next check, your 2025 earnings just hit the system. Every year after you claim Social Security and continue working, SSA is legally required to review your new earnings and recalculate your benefit if those earnings are high enough to replace a lower year in your top 35. That review for 2025 earnings is processing right now. If you worked at all last year, full-time, part-time, even a few months of consulting or freelance income, there is a real chance your benefit is about to go up automatically. The increase may be modest. It may be meaningful. It depends on what you earned in 2025 relative to the lowest earning year currently sitting in your benefit calculation. But whatever the increase is, it is permanent. It does not expire. It follows you for the rest of your life, and it compounds into every future cost of living adjustment that gets applied to your benefit. Log into your My Social Security account at ssa.gov and check whether your 2025 earnings have been posted to your record. If they have not appeared yet, they are still processing. If they appear but the number looks wrong, lower than what your W-2 or tax return shows, file a correction request immediately. An incorrect earnings year that goes uncorrected costs you real money every single month going forward, with no automatic fix coming on
its own. Second, Medicare deductions are shifting, and your net deposit is feeling it. Your Social Security benefit does not arrive as the full amount SSA calculated. It arrives after Medicare Part B has already been pulled. The standard Part B premium in 2026 is $185 a month. But a significant number of retirees are not paying the standard rate. They are paying a higher rate because of IRMA, the income-related monthly adjustment amount, and many of them have no idea why their deduction is higher than their neighbors or their spouses. Here is how IRMA works and why it is hitting retirees particularly hard right now. SSA determines your Medicare premium using your tax return from 2 years ago. For 2026, that means your 2024 return. If your 2024 income crossed certain thresholds, even temporarily, even due to a one-time event that will never happen again, SSA applies a surcharge on top of the standard premium that comes directly out of your Social Security deposit. The surcharge starts at an additional $74 per month and goes as high as $443.90 per month, depending on your income tier. On a fixed retirement income, that range represents a genuinely significant portion of a monthly budget. And here is the part that matters most right now. If your 2024 income was elevated because you retired that year and received a final full salary, because you sold a home or property, because you completed a Roth IRA conversion, because you took a large distribution to cover transition expenses, that income is gone. It existed in 2024. It does not exist in 2026. But SSA is still applying a surcharge based on it because the 2-year look-back rule does not self-correct when your circumstances change. You have to initiate the correction yourself. The form is SSA-44. It is called the Medicare Income-Related Monthly Adjustment Amount Life-Changing Event Form. You document the event that caused the elevated income, show what your current income actually looks like today, and
request that SSA recalculate your premium based on present reality. When approved, the surcharge is reduced or eliminated entirely, and your net deposit increases accordingly. Some retirees are recovering $200, $300, even $400 per month through this single form. Download SSA-44 at ssa.gov or pick it up at any Social Security office near you. Do not let another month pass with a surcharge that you legally have the right to challenge. Leave a comment right now and tell me, did you know that IRMA surcharges could be appealed with a single form? Because most people I hear from had absolutely no idea this option existed until they found a video like this one. Third, the overpayment recovery notices are reaching a new wave of retirees. SSA's ongoing overpayment recovery effort has been sending notices to beneficiaries across the country. And based on the timing of this latest update, a new batch of those notices is now in circulation. If you have received a letter from SSA in recent weeks stating that you were overpaid and that recovery will begin or has already begun from your monthly benefit, I need you to understand 3 things before you do anything else. First, you have 60 days from the date on that notice to file a formal appeal or request for reconsideration. That clock is running right now. If you disagree with the overpayment amount, if you believe the calculation is wrong, or if you are not at fault for receiving the excess payment, the appeal is your legal right. Filing it within 60 days pauses the recovery process while SSA reviews your case. Second, if the overpayment was not your fault, meaning SSA made an administrative error, applied the wrong benefit amount, or failed to account for information you properly reported, you can request a full waiver of the overpayment. A waiver means you do not pay it back at all. The form is SSA-632. Filing it does not guarantee approval, but it does pause recovery while the waiver request is under review. Third, even if you acknowledge the overpayment and do not qualify for a waiver, you can request a lower monthly recovery rate. SSA's default rate does not have to be your rate. If recovering at the standard percentage would leave you unable to cover basic living expenses, you can negotiate a reduced arrangement by contacting SSA directly at 1-800-772-1213 and requesting a repayment plan that reflects your actual financial situation. None of these options appear prominently on the overpayment notice itself. The notice tells you what SSA says you owe and what they intend to do about it. It does not volunteer the information that you have legal rights around every aspect of that process. Now you know. Fourth, if you have not yet claimed, the numbers in your account just changed. As part of this update, SSA has refreshed benefit estimates across my Social Security accounts nationwide. If you are approaching your claiming decision, anywhere from 62 to 70, the estimates currently sitting in your account reflect the most current calculation SSA has on file based on your posted earnings history. This matters enormously because claiming Social Security is one of the few financial decisions in retirement that is genuinely irreversible. Claim at 62 with a full retirement age of 67 and your benefit is permanently reduced by 30%. Wait until 70 and your benefit is 24% higher than your full retirement age amount, permanently, for life. On a monthly benefit of $2,000, that gap is $1,080 every single month for the rest of your life. Log in to ssa.gov today and look at the updated estimates. Then verify that your earnings record is correct for every year, because a benefit calculated on an inaccurate earnings record is a benefit that is lower than it should be before you have even made your claiming decision. Fix the record first, then make the decision. Here is what every single one of these situations has in common. SSA updated something. SSA confirmed the change. SSA did not call you. A letter did not arrive before the deposit changed. The system processed what it had, applied what the rules said to apply, and the result landed in your account, or didn't land in the case of a reduced or withheld payment, without a plain English explanation of why. That is not new. That is how this system has always operated. The problem is that most people assume no news means everything is fine. In the world of Social Security, no news often means something changed, and nobody flagged it for you personally.
The people who check their account today are the ones who catch a 2025 earnings error before it compounds into years of lower payments. They are the ones who file SSA 44 before another 3 months of IRMA surcharge leaves their deposit. They are the ones who respond to overpayment notices before the 60-day window closes. They are the ones who verify their benefit estimates before making a claiming decision they cannot reverse. So, here is what to do right now. Go to SSA.gov. Log into your My Social Security account. Check your current benefit breakdown and identify every deduction being taken. Verify your 2025 earnings have posted correctly. If your Part B premium is above $185, find out which IRMA tier you are in and whether a 2024 life-changing event qualifies you to file SSA 44. If you received an overpayment notice recently, check the date and make sure you are still inside the 60-day response window. And if you have not yet claimed, look at your updated estimates and confirm your earnings record is accurate before you make any decision. 10 minutes. 1 login. That is the entire distance between absorbing a change that costs you money and catching it in time to do something about it. If SSA Now helped you understand what just dropped and what it means for your next check, subscribe to this channel and turn on the bell. I track every SSA update, every policy shift,
Every deadline, and I translate all of it into language that makes sense before it affects your account. And please share this video with someone you know on Social Security right now. Their next check may be changing too, and whether they find out today or after the fact makes all the difference. I will see you.